Hello, I'm Ben van Beurden, the Chief Executive Officer of Royal Dutch Shell. Today we announced our second quarter 2017 financial results. Let me update you on these. In the second quarter 2017, Shell generated strong earnings of $3.6 billion, excluding identified items on a current cost of supplies basis. Cash flow from operations was around $11.3 billion, with free cash flow, including divestment proceeds and investments, of $12.2 billion. With this quarter, we now have a solid track record over a 12-month period with $38 billion of cash flow from operations at an average oil price of less than $50 a barrel. We have more than covered the cash dividend for the fourth consecutive quarter. We have reduced net debt by almost $9 billion and reduced gearing to 25.3%. That's from 28% a year ago. All while delivering a capital spending program this year of $25 billion, which is affordable and allows for the growth underpinning our 2020 outlook for free cash flow. Returning to our second quarter results. Our integrated gas earnings, excluding identified items, at $1.2 billion were some 35% higher than in the second quarter of 2016. These results benefited from higher realized prices, higher LNG liquefaction volumes and lower costs. And this more than offset the impacts of lower gas and liquids production volumes and lower contributions from trading. With higher realized oil and gas prices, lower depreciation and increased production, upstream earnings, excluding identified items, were around $340 million, an increase of almost $1.7 billion from year-ago levels. And downstream earnings, excluding identified items and on a CCS basis, were $2.5 billion, 39% higher than a year-ago level. And that was driven mainly by chemicals, which was up 152%, and refining and trading, up 66% from year-ago levels. Now, these results benefited from stronger industry conditions in chemicals and in refining, improved operational performance, but also lower operating expenses. We received $6.7 billion in cash proceeds from divestments in Q2 2017, and we have now completed $15 billion of divestments, so we have now reached more than $20 billion of the $30 billion goal for divestments that we had set. In the current macroeconomic environment, we continue to pull on 4 levers to strengthen our financial framework: divestments, capital investment, operating cost, and the delivery of new projects. And I'm confident that we are on track to deliver a world-class investment case to our shareholders. Thank you.